Welcome to an in-depth exploration of the fascinating world of financial statement analysis. In this comprehensive guide, we will embark on a journey to unravel the mysteries behind the numbers and equip you with the knowledge and skills to make informed financial decisions. Whether you're an investor, a business owner, or an aspiring financial professional, understanding financial statements is a fundamental pillar of success in the financial realm. Section 1. Understanding financial statements. Before delving into the nuances of financial statement analysis, let's start with the basics. Financial statements are the heart of a company's financial reporting, providing a snapshot of its financial performance and position. The three primary financial statements are the income statement, balance sheet, and cash flow statement. 1.1. The income statement. The income statement, also known as the profit and loss statement, reveals a company's revenue, expenses, and net income over a specific period. It provides valuable insights into the company's profitability, as well as the efficiency and effectiveness of its operations. 1.2. The balance sheet. Moving on to the balance sheet, this statement presents a company's assets, liabilities, and shareholders' equity at a particular point in time. It portrays the company's financial position, indicating its solvency and ability to meet its long-term obligations. 1.3. The cash flow statement. Finally, we have the cash flow statement, which outlines the inflows and outflows of cash during a given period. This statement helps assess the company's liquidity, providing critical information about its cash-generating abilities and cash management practices. Section 2. Essential tips for analyzing financial statements. To master the art of financial statement analysis, you must sharpen your analytical skills and approach the numbers with a discerning eye. Here are some essential tips and techniques to guide you through the process. 2.1. Familiarize yourself with key ratios. One of the most powerful tools in financial statement analysis is ratio analysis. Ratios allow you to compare different financial metrics, providing a deeper understanding of a company's performance and financial health. Some key ratios to consider include profitability ratios, gross profit margin, operating profit margin, net profit margin, liquidity ratios, current ratio, quick ratio, cash ratio, solvency ratios, debt-to-equity ratio, debt-to-assets ratio, interest coverage ratio, efficiency ratios, inventory turnover, accounts receivable turnover, asset turnover. 2.2. Analyze trends and changes. To gain a holistic view of a company's performance, it is essential to examine financial statements over multiple periods. Analyzing trends and changes can reveal patterns that may not be apparent when only looking at individual periods. For instance, consistent revenue growth over several years may indicate a healthy and growing business. 2.3. Scrutinize non-financial information. While financial statements provide valuable data, it's equally crucial to look beyond the numbers. Non-financial information, such as industry trends, competitive analysis, and management commentary, can shed light on the company's strategic direction and potential risks. 2.4. Differentiate operating and non-operating items. To ensure accurate analysis, distinguish between operating and non-operating items in the financial statements. Operating items are directly related to the company's core business activities, while non-operating items are one-time or non-recurring events. Understanding this distinction allows you to assess the company's ongoing performance accurately. 2.5. Assess cash flow and working capital. Cash is the lifeblood of any business. A company can appear profitable on the income statement, but still face cash flow issues due to delayed receivables or excessive inventory. Analyzing the cash flow statement and working capital helps determine the company's ability to manage its day-to-day operations effectively. 2.6. Compare with industry peers. Comparing a company's financial performance to industry benchmarks provides valuable context. Industry peers act as a reference point, allowing you to gauge how well the company is performing relative to its competitors and the broader market. 2.7. Investigate non-financial factors. Financial statements don't tell the whole story. Consider non-financial factors that could impact a company's performance, such as changes in management, technological advancements, or regulatory developments. Section 3. Practical case studies. Now that you have a strong foundation in financial statement analysis, let's put your skills to the test with practical case studies. We'll explore real-world examples from different industries, examining how to apply the tips and techniques we've discussed to make informed decisions. Case Study 1. Retail Industry. In this case study, we'll analyze the financial statements of a retail company. We'll calculate key ratios, assess working capital efficiency, and identify growth opportunities in a dynamic and competitive market. Case Study 2. Technology Startup. In contrast, we'll examine the financial statements of a technology startup. We'll focus on liquidity ratios, cash burn rate, and the company's ability to scale and attract investors. Section 4. Advancing your financial analysis skills. Congratulations. You now possess a solid understanding of financial statement analysis. To continue honing your skills, consider the following steps. 4.1 Continuous learning. Financial markets and regulations evolve continuously. Stay updated with the latest trends and changes by reading financial publications, attending webinars, and participating in workshops. 4.2 Enroll in finance courses. Consider enrolling in specialized finance courses or pursuing a finance-related degree to deepen your knowledge and open new career opportunities. 4.3 Gain practical experience. Apply your financial analysis skills in real-life scenarios. Practice analyzing companies and industries of your interest to enhance your expertise. Financial statement analysis is a journey of continuous learning and growth. Embrace the challenge, explore new opportunities, and always seek to expand your knowledge. The more you dive into the world of finance, the more you'll realize its immense impact on businesses and the global economy. Thank you for joining us on this enlightening journey. As you embark on your financial adventures, remember that success lies not only in crunching numbers, but also in understanding the stories they tell. Happy analyzing!